Welcome back to the deep dive. We are jumping straight into the deep end today.
We really are.
Because the numbers we're looking at this morning are, frankly, they're hard to believe. But before we get there,
Yeah.
if you're new here, hit that subscribe button, like, comment, share this stream. It helps the algorithm, it helps us, and it helps you stay informed.
It really does.
This is Daily Pressure Report USA at Pressure Report USA.
And today, the math isn't just fuzzy. I mean, it effectively paints a picture of a financial collapse for a major American city.
We're looking at a story coming out of Chicago,
Mhm.
and it feels less like a real estate transaction and more like
A crime scene investigation.
Exactly. We're talking about the Boeing headquarters, a skyscraper, a real trophy property right on the Chicago River.
Oh, it was the crown jewel. 20 years ago, that was the ultimate symbol that Chicago was a global player.
That it could steal business from the coasts.
For sure.
Well, the transaction just closed, and the price tag is effectively a siren going off for the entire market.
It really is.
The building sold for $22 million.
$22 million.
Now, that might sound like a lot for a house, but for a skyscraper.
To put that in perspective, I mean, that's the price of a high-end penthouse in Miami. This is a 36-story office tower in the third largest city in America.
And the context here is everything. Because back in 2005, Boeing paid $165 million for it.
Which means we're looking at an 87% destruction of value.
87%.
In the industry, they call that a haircut, but that's a very polite word for it. This is a liquidation.
So this isn't just some random lowball offer.
No, not at all. That price at $22 million, that's the market saying this asset effectively generates no wealth anymore. The income is gone.
Wow.
And the terrifying question is, if a global aerospace giant takes an 87% loss just to wash their hands of a city.
What does that tell us about the economy they are leaving behind?
Exactly.
Stay with us, because we are going to explain why this fire signal might actually be a death spiral for the taxpayers who are left.
To understand the crash, though, we have to go back.
Back to 2001.
Yeah, you really do.
It feels like a different lifetime. I mean, the atmosphere in Chicago at that time.
It was electric.
They beat out Dallas. They beat out Denver. They landed Boeing, moving from Seattle. The city threw a parade for them.
It was a massive coup. You have to remember, for a city like Chicago, stealing a company like Boeing, that's validation.
It was proof their whole economic model was working.
It signaled the Rust Belt era was over. The corporate era had arrived.
And Boeing acted like they were staying forever. In 2005, they went all in.
Bought the building at 100 North Riverside Plaza for that $165 million figure.
It wasn't just an office, it was a statement.
You don't buy a building for that much if you have one foot out the door. They were planting a flag.
But then, fast forward to May 2022, the honeymoon doesn't just end.
It crashes.
Boeing announces they're moving to Arlington, Virginia. After 21 years, they're just done.
And the excuse was that they needed to be closer to D.C. for defense contracts.
Which, okay, on the surface, that makes some sense.
It's a valid reason, but let's be honest. If Chicago was still that powerhouse business environment from 2001, a company like Boeing finds a way to make it work.
They don't just cut and run.
Not and sell the building for scrap, no.
And it wasn't just Boeing. This is where it gets really concerning. It was like a dam broke.
The exodus.
In the summer of 2022, in just 7 weeks, 3 Fortune 500 companies said they were leaving Illinois.
You had Boeing, then you had Caterpillar.
I mean, they're as Illinois as it gets. They've been in the state for nearly 100 years.
A century of history. They moved from Peoria to Deerfield, trying to make it work, and then just said, we're going to Texas.
And then the third one, which might be the most damaging for tax revenue, Citadel.
Ken Griffin, the richest man in Illinois, moved the whole hedge fund to Miami.
After 30 years in Chicago.
And when guys like Ken Griffin leave, they take a massive chunk of the tax base with them. We're not just losing logos on buildings, we're losing the people who pay the bills.
So that brings us to today. Boeing is basically gone. They're renting back just 3 floors of that building.
The one they used to own.
And the building itself sold for that $22 million figure.
It's the kind of price you accept when you just want out, at any cost.
Okay, let's get into the weeds. We promised the numbers that matter. We've got 5 or 6 stats that paint a very specific picture.
Right.
We've already hit the 87% loss, but why is that number so catastrophic for the city?
Because of property taxes. Think about it. A building valued at $165 million pays a certain amount. A building at $22 million pays way, way less.
And the city still needs the same amount of money to run.
Exactly. So who makes up the difference? The homeowner. That 87% loss isn't just Boeing's loss. It's a future tax hike for everyone else.
Which leads right into the second number, 28%.
The office vacancy rate in downtown Chicago as of Q3 2025.
An all-time high.
It's a staggering number, but I want to make sure people visualize this right.
What does that number actually look like on the ground?
You feel it. It's not just empty lobbies. It's the whole ecosystem that supports a skyscraper. The dry cleaners, the sandwich shops, the bars.
The lunch rush just isn't there.
It's gone. When 1 in 4 office workers disappears, those businesses fail. You walk past storefront after storefront that's papered over.
And 2.3 million square feet abandoned, that's like, what, the Empire State Building?
Roughly. Sitting empty in the middle of the loop, it's dead weight.
And while that revenue is dropping, the bills are skyrocketing. This is the third number, and this one is terrifying.
The pension explosion.
$11.2 billion versus $614 million.
Okay, so let's break this down. In 1996, Illinois taxpayers paid about $614 million into the state pension system.
The cost to keep it running.
Right, today. That bill is $11.2 billion.
That's nearly a 20-fold increase. I mean, if my mortgage went up 20 times, I'd expect my house to be paid off. But that's not what's happening.
No, it's getting worse. It's what's called negative amortization.
Break that down.
They're not even paying the full interest on the debt. They're paying just enough to survive the year, but the unpaid interest gets added back to the principal.
It's like only paying the minimum on a credit card while you're still using it every day.
Exactly. The hole gets deeper even while they're throwing billions in.
Which connects to the next debt, 51.6%, the funding ratio.
Correct. Illinois has about 52 cents for every dollar it owes to retirees. It's the worst funding ratio in the entire country.
Wait, if they are paying billions more, why is the hole still so deep? Why isn't that number going up?
Because the benefits are constitutionally locked. We'll get to that. And their investment returns haven't kept up with reality. They are sprinting just to stay in the same place.
And to pay for that sprint, they have to tax the businesses that are left. Stat number 5, 9.5%.
The corporate income tax rate in Illinois.
One of the highest.
And you have to compare it to where the companies are going. Texas has 0. Florida has 0. For a CEO looking at a spreadsheet, 9.5 versus 0 isn't a hard decision.
And the last number here, 56,000.
The net population loss. Just between July 2023 and June 2024.
That's people voting with their feet.
It breaks down to one person leaving the state every 9 minutes. A taxpayer, a consumer, just gone.
Okay, so we see what's happening. Empty buildings, people leaving, exploding debt. But why? I mean, surely the politicians see this. What is driving this car off the cliff?
It's a combination of 3 main drivers. The first and the most important is what we call the pension death spiral.
This goes back to that constitutional issue you mentioned. I want to spend a minute here because this seems to be the key.
It is the unique trap. The Illinois state constitution has a specific clause that says pension benefits, once promised, cannot be diminished or impaired. Ever.
So they can't cut costs, even if they run out of money.
They cannot. It is legally forbidden. So look at the loop. The state owes $143.7 billion. They can't cut the benefits, so they must raise taxes.
But when they raise taxes, the businesses and the wealthy residents leave.
And the tax base shrinks. Now you have fewer people left to pay the same fixed debt. So what do?
You have to raise taxes again on the people who stayed.
It is a classic death spiral. The more you tax, the more people leave. The more people leave, the more you have to tax.
And the second driver seems to be just a hostility to business. We have reports that Caterpillar's former CEO warned the state.
He did, 10 years ago. He told them explicitly that Illinois wasn't on the radar for new factories. He warned them about the costs, the regulations.
And what was the response?
He was largely ignored. The attitude was, where are you going to go? You're Caterpillar. It was arrogance. And now the Tax Foundation says Illinois dropped 10 spots in business friendliness in just 5 years.
Well, every single one of its neighbors improved.
That's the key. It's not just about Texas and Florida. The state next door is eating your lunch.
It's just the third driver. Cost of living arbitrage. Deerfield, Illinois is 26% more expensive than Irving, Texas.
Right. So a worker can move to Texas, get an instant 26% cost of living reduction, and pay 0 state income tax. It's a massive raise just for moving.
Okay, but surely the politicians see this. You can't look at an 87% loss on a building and say everything is fine. What's the root cause of the denial?
The root cause is that they are mathematically cornered, that pressure point we talked about.
The Constitution.
It means they have no other lever to pull. They have to raise revenue because they cannot cut the biggest expense.
Yeah.
They're forced to pretend the tax hikes won't drive people away.
Because if they admit that, they have to admit the whole system is broken.
That it's insolvent, yes.
So let's talk about who really gets hit. Because Ken Griffin is in Miami. He's fine. The CEO of Boeing is in Virginia. He's fine.
Right.
Who actually pays for this?
It's the middle-class homeowner. That's the victim here.
Explain that. Why does the homeowner pay for Boeing leaving?
Well, the wealthy are mobile. Their assets are mobile. But a family who bought a home in the suburbs, that's an illiquid asset. You can't just pick up your house and move.
And they're getting hit with a double whammy.
Precisely. First, Illinois property taxes are the second highest in the nation. As commercial buildings lose value, local governments have to raise the rate on homes to make up the difference.
So your tax bill goes up.
Significantly. But here's the second part. Your home value. Because people are leaving, home values are stagnating. Your home is supposed to be a savings account. Here, it's an anchor.
So you're paying more taxes on a house that isn't gaining value.
You're paying a premium to live in a state where services are being cut and your neighbors are leaving. It's a wealth destruction machine.
And we have data on who's leaving. It's not random.
No, this is crucial. About 40,000 households earning over $200,000 left. That group is only 6% of taxpayers, but they paid 40% of the taxes.
Let me repeat that. 6% of the people pay 40% of the taxes, and they're the ones leaving.
So think about that math. When that 6% leaves, that 40% of revenue vanishes. Who fills the gap?
The plumber, the teacher, the manager who stayed behind.
The bill falls on the middle class.
It's heavy. So looking forward, what comes next? Let's start with the worst case scenario.
Scenario one is the commercial collapse.
Mm-hmm.
And we're already seeing signals of this. Look at the group on headquarters.
Another big building.
Sold for $510 million in 2018. It just sold for under $89 million.
An 83% loss, just like Boeing?
Just like Boeing. If this holds, and commercial real estate values collapse by 80%, the tax burden shifts entirely to residential homeowners. You could see property taxes double again.
That's the nightmare. What's the base case, the most likely outcome?
Scenario two is what I'd call the ghost town stabilization. Vacancy rates stay bad, around 28%, but they stop getting worse.
So it just stagnates.
Yes. Chicago survives because of O'Hare Airport. It's too big to disappear.
Yeah.
But it stops being a global capital and becomes just a regional hub. Smaller, poorer, quieter.
Is there any best case, a scenario three?
There is, but it's the unlikely one. Political reform. This would mean amending the state constitution to allow for pension restructuring.
Is that even possible?
Technically, yes. Politically. It has been blocked at every turn. But if the crisis gets bad enough, maybe the political will changes. Right now, though, sources say it's impossible.
So what should people watch first? What's the canary in the coal mine?
Watch the next big lease renewal. When one of the remaining Fortune 500 companies has their lease come up, watch what they do.
If they renew, we might be stabilizing.
If another major HQ leaves,
Yeah.
the spiral accelerates.
That's the signal. Okay, let's bring this home.
Yeah.
To recap, Boeing took an 87% loss just to get out of Chicago. That's the headline. But underneath that, you have a pension debt crisis driving taxes up, a vacancy rate turning downtown into a ghost town.
And a demographic shift where the high earners are leaving regular families with the bill.
It's a classic example of what happens when you ignore economic reality for too long.
Math always wins in the end.
And this is a warning to every state thinking they can tax their way to prosperity.
It is.
We want to hear from you. 2 questions for the comments. Number 1, where are you watching from, and what are you seeing locally in your commercial real estate market?
And number 2, do you think this gets better or worse in the next 6 to 12 months, and why? Is the bottom in, or are we just getting started?
Drop those answers in the comments. If you got value out of this deep dive, make sure you're subscribed to @PressureReportUSA and share this with someone who needs to understand what's happening.
Stay informed, everyone.
Stay under pressure. We'll see you next time.